Greetings, market rebels. Welcome to this week's macro measure and sector situation video. Let's see, it is Friday, April 17th, 2025. I'm Wayne. Hopefully everything's working. Let me just do a double check. Test, test, test. And it seems to be I got a weird warning pop up on that, or I should say notification. So I'm not sure what that was about, but it looks like it's working to me. Hopefully it is. And I'm not recording in vain. Anyway, Friday, April 17th, 2025. I'm Wayne. It's about a little bit after 3 p.m. here on the East Coast. Let's get into our trusty market rebellion disclaimer. Let's get into our trusty intellectual property rights notice. And then I'll move into last week's slide, which was brief. And again, this one will be fairly brief, and hopefully I'll be able to roll through this quickly, which, as many of you know, is really not my preference, but it's really what is greatly preferred. I don't think I'm going to hit on too much here. I think this still holds up. As we said, risk back on sort of, and that's really persisted, which we'll talk a little bit about. There was a little bit more of a relief rally attempted, but it really did not get very far. And it, even after a second attempt to approach the same level, essentially, it still couldn't get anywhere in the SPYs. And from that point on, it's overall been, I would say, a rough and disappointing week. But we'll see what happens next. It's not over yet. And let's see. Yeah, so these were some things we just brought up that we thought were important and may still be. So I don't think we need to hit on that much longer. Let's just bring up this week. I'm just going to let that sit there. I think I'm going to put that over to the side in a moment and then try to work on it before we wrap things up, so I can really kind of at least bring up a chart, reposition things and bring up a chart. So I'll leave all this up. I'm calling this the news pong market because that's what seemed to push us back and forth from one side of the range to the other side of the range for most of the week. That was really until late Wednesday, which sort of acted like the Thursday of this week due to the holiday shortened week. And then we've had this recovery attempt today that was looking pretty good. But as we draw towards the final rubber meets the road hour/half hour of market action for the week, it's the rally attempt is, I'd say, back on the ropes a little bit. So I'm going to leave that there for just another moment. Just wish everyone a great holiday weekend for those that have holidays this weekend. And then let's go with a quick reposition here. So I'll stop the share, going to move things out of my way, and then bring them over to my main screen, hopefully, where we can work with them. So let's get up. Let's get the yep, I think screen 3 should work here. Yeah, so this is the SPYs. We came into this week after having this nice situation develop on Friday, and we threw out mainly, well, we put levels out on both sides of the action, but we were really thinking more or less, given how strongly the market finished on Friday, after it reversed Thursday, that they would try to do a little more with it. I would say they did on Monday and Tuesday, but it was a disappointing effort, if you ask me. I thought the 20, I know we mentioned, but I really thought they were going to be able to take this up a little bit more and at least toy with that resistance line that's up there. And they were not able to do that. And so you could say, well, the Fed commentary, kind of the Fed at odds with Trump at odds with the Fed. You could say other trade tariff related headlines were problematic. They probably were, can't argue with that, and that's the market we're in. So it's been, to me, a disappointing market, although I can't say I'm surprised by it, just because when you are in these corrective phases and folks are hesitant, that's when the UOA isn't really running as strongly. I think the UOA runs the strongest when we're in a nice bullish phase and folks are willing to commit, and there's news developments and positive developments happening within companies. and upgrades happen, and sectors get upgraded, and there's all kinds of ways to use the UOA that we try to employ. And then there's deals that get made, and there's big announcements that typically happen. So that stuff is off the front burner for now, and you end up with more of a, I guess, difficult environment overall. There's still some good stuff that happens, but it's not really on the same order or magnitude, I think, as when you're in a bullish market. Having said that, uh, this week, right, I just think you've got this market sort of held hostage action wise because you had a holiday week lead up. That can often be a rather tedious affair. Until yesterday afternoon, it really was, for the most part, tedious. So I would say half of this week has been fairly tedious. The last day and a half, it's picked up a little bit more, but still, it's certainly not rip roaring and not super interesting. I would say that some of the notes that I put on that slide, which we'll get back to, one note that we have to acknowledge is that you have to feel disappointed that you couldn't do a little bit more to extend the relief rally. Another note I would make is that it's really not a good thing typically when the market becomes comfortable, uh, really languishing well below the 200 SMA and all the other longer term SMAs. So here's that in purple, right, way up there. And so we're way below the 200, and you all know that all of you that have been trading for the past few years, you know that every buying opportunity was, there was always a buying opportunity, and there was a lot of stampeding in for them. And that's just the nature of bull markets. But that's what we're seeing here. There's a pattern shift, right? There's a behavioral pattern shift, and that's just not happening the same way. So I think that in a roundabout way confirms that we're not really in that bull market environment. If you were still wondering, are we in that? I think that's telling you that you're not. The fact that you've really lingered or languished down here for as long as you have, they didn't march it right back. V recoveries, which were fairly rare until the Fed went absolutely haywire over the past few decades. Those V recoveries after sell-offs have been something to see, right? Something different that really were great in frequency compared to really all the decades prior, from what I can tell from having researched it a little bit. So that's a whole different story, but we're just not getting that. And I still think there's a lot of trepidation out there. And I think it makes sense, right? We've been making this simple argument. Again, a lot of the stuff we talk about is just simple. We don't really try to get into the weeds. I don't know how much the weeds really help you. I've come to the conclusion I used to really believe that you should know all about the weeds, but I used to endeavor to do exactly that, even though I was a one-man band. But I don't know how much it helped me. In fact, it might have just depleted me of energy and not really helped me all that much in the end, because the market really just focuses on what it cares to at the moment. Even if you know the fine print and the details, a lot of times the market simply doesn't care about those. So I focus on these simple things, and the simple thing is that really, to me, when you have this uncertainty, you have the lack of clarity that you've got. I haven't listened to Fin TV or read this type of stuff. I just think it's obvious, right, that I can say it. And even if I'm not, I would assume I'm in good company that a lot of people are saying this, but I just think that without that clarity, you just get a lack of conviction. Without a lack of conviction, folks are just not deploying capital the way that they typically do. And I guess when you add in all the economic issues that are cropping up and some of the disruptive things that could continue to crop up and mushroom up from here, it's potentially problematic, right? So that's where we are. So there's a little bit of a disappointing factor with these charts. The other factor that's maybe more positive is that, yes, you did make this low, but yes, the low is similar to a low that you hit on Friday and reversed from. And you could say this could be the start of the mini double bottom-esque type situation, not really textbook, but you get the idea. And you do have, at this moment, a higher low to work from. So rather than running all the way up here and then churning a little bit, then going again. Maybe this is a little bit of an extended pause. And now on the chart, you've got this higher low here, and that will allow you to sort of make this move up and to and maybe through for an extended rally. And you would say, well, what would happen? What would drive that? Why would that happen? Well, as you all know, it doesn't really appear at the moment. We can't say this is why, but we know that the news ticker can really flip quickly, right? Something can happen dramatically, and you could get another squeeze leg right back up again. To that, we can add that EPS season is rapidly approaching. And so they could use EPS reactions to squeeze stocks back up. I'm not saying that that's a lock or anything along those lines, but it wouldn't be the first time that many of us have seen them do that. And my question, which is in the notes, remains: okay, let's say they do that. Let's note that they have engineered beats about 75% of the time. So you might say, well, why are you calling them engineered beats? The reason I'm calling them engineered beats is because the street sandbags, typically they put low estimates out. They have a better beat on things than I think that they give off. And I think they knew that there was a potential sell-off coming, but notice that you don't see a ton of downgrades and EPS revisions lower until a lot of damage has already been done, because they just don't like doing that. That's just Wall Street being Wall Street. But I think they sandbag, they keep these things low. The accountants know where they have to get over to keep the stock price and Wall Street happy and all the shareholders happy. And then magically, a lot of these companies just barely beat. And then, much like with the government statistics, later on you see revisions, and sometimes, they're just revised lower. Don't even want to go into the state of accounting, because a lot of people will make the argument that that's extremely bogus to begin with. But that's what you typically get. So you have to expect that there's going to be a lot of beats. And if you don't see those beats, that's pretty bad, because, right, they typically routinely beat. So if you have a really low percentage of beats relative to your normal quarter, that, and their tone gets ugly early, that could be ugly. On the flip side, if they're able to take a couple monster names and really get shorts afraid, that could really create a scramble. I still would maintain, this is my key point, and I don't think it's unique to me, but I still have to scratch my head and say, how can they possibly come out with wonderful guidance to make things look great, right, for the second, third, and fourth quarter? I don't know how you do that when you're in the middle of this type of an environment. You're in the middle of this maelstrom. I don't know. I have a hard time believing that can be pulled off, but we'll see, right? That's the good thing about all this. We will soon see. That's just my big sticking point, that even if they do pull off the routine beats somehow, despite Q1 GDP, which was really in the tank, it has improved, but still, it's not going to be a pretty number overall. When you take that into account, you have to wonder how wonderful things could really be. And then again, with a lack of clarity, how wonderful guidance can be. So we'll see if the earnings do not really help squeeze the market back up, or maybe add some fuel to this relief rally, other than trade and tariff headlines or political developments. I'm not sure what would, given that the Fed again and Trump again are at odds with each other. So that's my simple, this is the state of things right now, in a simple way. I don't want to overthink that. I just think that's the big thing. And with other places like the EU really reducing rates, we seem to be artificially high relative to the underlying economic information, or excuse me, that I'm seeing. So we'll see. We'll see where things go. But that's my argument. If you want to look at a little bit of a positive, my argument would be, well, you've got a slightly higher low there. Maybe they can work with, but you are precariously close to that here on this chart. So you're right there. You're just a fraction away, really, from challenging those lows. and another long-term support line that I think is a big deal. Uh, and you could be there quickly. You could be doing a retest quickly. Notice, right, this kind of confirms, if you want to give it that much credit, the volume this week has been really reduced, right? So this has really not been a very interesting market this week. Not really acting well. It's definitely been, I'd say, a void of really serious buying, it seems, where people, you would think, well, here's a great opportunity. Well, they're not stepping up just yet. They're not stepping up just yet. And other things look similar. The UNH news really took down that, and took down the Dow today. So the Dow has recovered from that ugly open to an extent, but that's making its new low. You could argue there's a couple places that might find some more support, but that's really not a pretty week for the Dow, where you open up here and then essentially they distribute for the rest of the week with it, right? So that's not really a great look for the blue chips. Um, Similar, right? I don't want to belabor this on each index ETF, but similar, where they could only muster getting near the 20 and could not extend towards our resistance lines and other fibs we thought they might try to take a crack at. I did think they would at least take a crack at the resistance line, like I said, on most of these, but they were not able to do that. Another sign that things, I think, are not wonderful, right, is also in the Qs. They did just about the same thing. They were distributed most of the week as well, because they open them at the high and they're a lot closer to the low. So this does look like an ugly week of distribution, as subtle as it is. The saving grace of the week to me is that it wasn't done on heavy volume. And again, I often mention this, but you have to be careful, I think, reading too much into holiday weeks. So this did have a little bit of a holiday week feel until really yesterday afternoon, when things took a turn for the worse and it got a little bit scary. But the gang, I don't know if gamma exacerbated yesterday and today's just a recovery. Gamma exacerbated both days. Yesterday was just a sell off, and gamma's helping lift it today. I don't know. I wish I did, but I don't know. But you have to make the argument, right, that, and I don't try to arrive at these wishy-washy conclusions. If I really think there's a strong lean, I would say it. Like last week, I thought we should be seeing a little bit more of an attempt to extend the recovery rally. And boy, they did have a very little attempt to do that. It lasted for one opening and then another opening, and that was just about it. And it just hasn't been pretty since then. But you have to give them credit that they might have a sneaky little higher low here in this market, and that might be something they can build on, because the run to resistance is a lot closer, and therefore they will not have to expend as much energy. So if they do get some positive data or positive reactions from some companies that are reporting, or if there's good developments on the tariff trade front, you get that kind of a pop, and you could start to pick up momentum, given how oversold we were and given how ugly everything was in terms of sentiment, market breadth, CNN fear greed type gauges, where things were just so poor that you really needed to, it's almost like a statistical lock that you have to improve. It isn't, but it just almost is. So there's just some comments on that. In terms of other things, right, the small caps have had a really boring week, which might not be a bad sign. So I'm not trying to go glass half full here. It just, that's the way that I think the chart should be read. And I would be barely like glass half full. But the sign, right, that things maybe are a little bit better is that you're not seeing further deterioration in these smaller companies that don't have the balance sheets, and they will also likely suffer from the disruptive developments of what lays ahead for the next few months. I mean, how much longer, will supplies remain as they are without great disruption? I can picture that happening sooner than later. I could be wrong, but without warehousing the way that we used to, and just in time and so on and so forth. If the reports of the China factories really coming to a grinding a seizure are true in many cases, then you have to think that that starts showing up. It starts to starts to affect many many areas and many companies, but this is hanging out fairly well. So that might be a little bit of a silver lining there. It has been beaten down. It has been the laggard. So just worth noting, I think. I think to be fair, another part of maybe the silver lining is the market breadth developments this week. And so while they're not extraordinary, you have sort of stopped making a bunch of new lows versus new highs. You could see the McClellan oscillator is definitely still improving here. You can see that the number of stocks above the 50, the 100, the 200, that's at least moving back towards a newish high or near the recent highs. So that hasn't gotten worse. And advancers, decliners, cumulative average, that's also been improving. So that's all working out a little bit better. Remember, I do it every week, but this is not dependent upon the symbol. All these basic breadth measures that we just essentially take a glance at, they're all just related to the market, and they're independent of whatever symbol's up there. But I'll put the spies there, just in case. But so I think that's not bad, right? It's not great, but it's not bad. So to me, it's better than going the other way, right? So I'm going to count that as a slight positive as well. I think if you look at the sectors, which we'll do, we bring those over here. The sectors to me also are a slight positive. But I would put a big asterisk right next to that. I might have even done that on the notes. Energy has tried. We put a few ideas in this week on the energy side. It's tried to do something, so I'm glad to see that. At least it got up to, looks like 82.76 today. There was some paper, so it was one of the bright spots. So hopefully there was a little bit of opportunity in there for rebels this week. And some of the key leadership sectors, right? These are why I'm calling it dubious, because look at these. XLK, XLC, just not leading the charge yet. They tried to get the financials going, looked like that could do a little bit more, and that kind of fizzled out. That is an important sector in my mind, along with transports. You almost always hear me mention those. Both of them with just an at best week, nothing really great to write home about. So two important sectors not doing anything special. The other factors are that real estate and where's healthcare down here, defensive sectors, they're also kind of split, right? So real estate's recovering, healthcare rolling over. So that's kind of split. You've got staples doing well, defensive, right? Defensive place to go. Meanwhile, discretionary is not doing well, right? So there's kind of this mix, but overall, I'm going to say overall, because you didn't get worse, and you've got kind of like this volatility sort of dry up, and people aren't just bailing out. I'm going to call that a little bit of a win. XLU probably up decently on the week as well. So a little bit of a win. I think that the fact that you didn't get smoked, but really defensive sectors like XLP and discretionary being more offensive, and that sort of diverging, not good, right? Just not good. But there's a couple good signs with energy and transports doing a little something. You really need your XLK and your XLC to start rejoining the party. I mean, that would really be super helpful. Let's go back and take a look at our SMH, and I might have to just reduce this, but I'm going to call that a little bit slightly positive. When you add the breadth into the sectors, I think you get an overall positive, although not super strong. SMH, super important sector, and you just can't be happy with the week, right? It's mostly distribution. Gap up on Monday, that rally attempt that I thought would extend a little bit further, wasn't able to even get to the declining 20-day there in light blue. And so rolls over from there by Wednesday, and I think the Nvidia news really took it down, and then you're near the lows of the week. So very hard to be excited about things in a normal sense when such a key sector is performing the way that it is, continues to perform the way that it has, and really is maybe leading you back down towards the lows. So this needs to be arrested, in my opinion, quickly for bulls. Otherwise, this getting itself back into dire straits and retesting those lows, to me, will bring the rest of the market down with it, or I should say, will most likely bring the rest of the market down with it. I can't guarantee that. It's just the way that I look at the market these days in the modern market. I think that's a problem. Another sort of problem, excuse me, if you will. This is why you shouldn't have seltzer water drinks when you're recording videos. Another problem would be XAU. Now, this has been, I don't want to say the same thing I say every week, but the short story is we've been charting this for a very long time, and we noticed there was cup and handle type stuff happening on really big picture charts. So this has been something we've been waiting for, and to see this finally deliver has been really good. I hope a lot of folks got on to this and did well with it. But this run that's had, right, it got overdone now, but I think you just made a new all-time high in the actual future, which I'm not going to go into that because then it leads to checking out everything else. Here's the ETF. I believe this is, and we can check this, but I believe this is a new all-time high, and it is. And you could see there was a projection we had from way back on this thing, I believe. So it's there, it's just remarkable how these things end up playing out if you go back to them. And I don't really look at this every day, so sometimes not that I forget that it's there, but it's just out of sight, out of mind. And you could see just how strong this has been. So this, to me, right, is telling you your leadership sectors really not looking good in the form of SMH, XLC, XLK. They're all kind of somewhat related. And then you've got this super defensive space making new all-time highs, and you've got other problems in your sectors. Not terrible problems at the moment, but not really a great look. So this is why it's very hard, I think, to get super excited about the market at the moment. I'm trying to find some things that are positive, if I can, and I think I did. I mean, with the higher low and the little distance there is between where we are, where this low is, and where the key resistance is, to really open it up for a few more percentage points higher and towards the 200, which maybe it needs to tap and try to work with. But right now, right, you have to also be equally as concerned about what if this recent low this week doesn't hold out? How much more support is really there? And I think the support comes down to this support line that I've got drawn in purple, and that 510, 511 level we talked about way back when, that they actually got to, and they just shredded right through it. And as I think I said at the time, when you shred through something so easily, that usually portends bigger problems. Sure, the markets, I would argue with a lot of folks that say this, that and I would argue along with them, that the markets typically overshoot, and they do. That's my experience. They typically go too far to the upside and then too far to the downside. And they may have done that in this case. I don't know. But at the same time, this really shredded so easily, just right through the 511 level and that support level, that, and by a large magnitude or degree, that's why, to me, this is sort of more of a warning sign than just an overshoot. I'm counting it more as a warning sign. So I'm really still very concerned about the market. I feel like we are at risk of a lot more, unfortunately. And I would love to change my tune, and that's what I try to do when new information gets introduced. And usually that's in the form of the charts. And so, in a quick side note, I just look at the charts as this reflection of human behavior, right? That it's something based upon real behavior with real risk, with real capital with something very important on the line, and this is the collective answer wherever we are currently. This is the collective answer. This is how we got here, and that there couldn't that can be informational, right? And so to me right now, the way that it shapes up, I can see a few positives here and there, and calling the next wiggle or waggle can really be tough, which is why I've been saying just be nimble throughout all this. Just be disciplined and nimble, because holding overnight is very difficult in a market like this where you just don't know what's going to hit the news ticker next. And it could be positive, it could be negative, but right, if you can make some nice money, some decent little returns while other people are really getting chopped up, you're way, way ahead of the game. That's just my philosophy. So overall, there's a couple minor positives, but overall, you have to say at this point, it's a battle between who currently has control. And I would say the intermediate term control is probably still there for the bears to take back, and seize fuller control. But the long-term trends are still up in this market. So you have this real tug of war going on between those forces where if we look at we look at a weekly chart like we are, and I apologize for the busyness, but this is one of the less busy ones that I've got right now. If you look at that, you could see, I think with this line I'm about to turn blue right there, that support line is way down there. And I think that's really what tells you if you're still in an uptrend. And to me, you're still in a long-term uptrend at the moment. Now, you might say, well, wait a minute, isn't this trend broken? Yes, the long-term trend, the way we typically look at it on the daily, is broken, but I don't think it's broken on the weekly. Let me see if I can get another chart that might be less busy here to do this with, because I did create these a couple of weeks ago for us to get a better look. So here's a more of a long-term look. And so you can see that this goes back to those post-COVID lows. I just blasted right through those with my line to get a better looking line, something that I thought was more reliable. So I might have to go all the way to the monthly on this one to get us a better looking line. And that takes you into the era I think we're still in. So I took that all the way back to when the Fed went full Skynet on everything, and that's what I'm using as my anchor point, because I do think that the nature of everything changed here, and so I'm keeping that carrying that philosophy forward. And so I would say that, look, if you want to use a point, you're still probably good until, realistically, you're probably still, even giving a little overshoot, you're probably good to about, let's just round it off and call it 410. So I think you're probably still okay until about 410 if you were to fall that far. I know no one wants to hear that. That's like another whatever 20% plus, but you're probably still in something where you can say, well, that's not this kind of an ugly break right to that point. You would maybe then risk call it 350. So probably sub 410 begets you 350, and we don't even want to talk about it from there. But I'm not predicting that. I'm just saying I'm using this as my way of looking at that we're still in a long-term uptrend. If you say that you don't think we are because you use something different, that's okay. I'm just telling you what I like to use and the reasons for it. And I'm going to say that you're still in one. People that use really, really long-term charts are going to say, yeah, you're still in one. How can you not be? As well, but that's a whole different discussion. I'm looking at just the charts I work with here, day in, day out, and I'm going to put those numbers on it right now. So I'm going to stick with that 410-ish as a big level, and then that 350 as a big level as well. But if you start cracking, I'd seriously be concerned if I'm cracking below this support line, right? Because I don't know if it's an overshoot like these probably were, or if it's a break of the trend for real. But that's what could lead to, obviously much, much larger problems and serious things. I don't know if you ever have another 2000 post March 2000 80% plunge like you did in the NASDAQ. back in those days. Maybe you would. I don't know. I'm not going to rule it out. I don't think that you ever get anything like that, but we just don't know what the future holds in terms of all these developments as well. So I just wanted to mention I feel like that's where the battle is. Like Bulls still have some room to spare if things fall where the whole trend is not broken. And Bears are really close, I think, to reasserting themselves after Bulls tried to step in. So Bulls kind of they do need to hold, I think, here. This low would be good, or I guess our 511-ish that we talked about, 510, 511. Otherwise, you're probably in retest mode. So I'm going to go back to where the 20-day is and so on and so forth for us on here. And that's where I'm looking at. I'll make this a little bit larger and we'll get out of the weekly. But I think on the daily, that's where you're looking at. You're looking at trying to get at least back to this 20 if they could use this higher low. And if not, if they do that, then I think you're looking at the resistance line. And then I think you're looking at these fibs we talked about last week, which are going to put you up near the 560s. And then it just goes up from there with SMAs and other flat lines. But that's what I would be looking at on the upside. And I already covered the downside. On the downside, you've got Thursday's low. Then you've got this support line that comes in here, which happens to be right near that 511. And then if that doesn't hold, you might say, well, what about that low right there? And that's all you've got, 509. Otherwise, you're probably back in retest mode or higher low mode versus here at the very least. So I do think you're in a tight, tough spot, and you didn't get a lot. You've got this holiday behavior, and you just don't have a lot to work with in terms of anything. I think the Bears are just still overall in intermediate term control, meaning right the past few months, and that's going to potentially start grinding up with another sell-off that could start grinding up against the long-term trend, which is a little scary. Let's be frank about it. So let's go back to our notes and see if I've neglected to mention anything. And so I did talk about this. I did talk about this, but we'll just reemphasize that with the way that things are acting with XAU and gold and silver doing their thing, with the dollar just absolutely plunging and not recovering, with yields having ramped back up and pulled back somewhat this week, but they're just hanging in there. And with what Powell said, and then with the VIX kind of still hovering near 30, as opposed to careening lower towards the 20s, into the 20s or low towards the 20 level, it's a problem, right? That's telling you things are still dicey, I think. I talked about that already, talked about EPS, talked about this. These are critical factors in my mind. And I do want to say that I do think that we're still in relief rally. We're in a relief rally pullback since we didn't really advance this week. We had the tentative higher low, and I already talked about the long-term trends remained intact. But the Fed is at odds with the administration and probably what the market wants. So there's a lot of things that normally the market likes: certainty, lack of uncertainty, right? A clearer view, better rate support, and better support for the market from the Fed. And none of that's there. None of that's there. So pretty bad. I think overall that's all pretty bad. Lack of advancement this week. That's a problem. Willingness to remain, we talked about that, below the 20 and 200. We got the cool off in the volatility maelstrom from this holiday week. Does it pick back up next week? I think it will. I mean, I don't know if that means we go higher, low, or both. I just think that it's going to be a more interesting week next week in terms of the action, the price action. I think this was a little bit of a, I don't know, lackluster week, and maybe it just had to do with the market needed a lackluster week, and you had the holiday excuse. This maelstrom, we talked about that. I would say nimbleness shines, as we keep on noting. I haven't used, I don't think, the word nimbleness, but I think I've been saying just stay high on the discipline. Don't be afraid to get your quick rolls and trims in, and even just leave the position when you have a nice little gain, and call it a day, unless there's news driving it, right? If there's been a news ticker that's just hit and really turboed your position into a great spot, maybe you're just rolling at that point, because you don't know when the next counter to that will hit the news ticker. But I expect that to continue. I don't see any end in sight on that front, especially right with the whole China thing seemingly getting worse, right, as time goes by. So with China getting worse and that being so key, I mean, a lot of us know that there's so many products on the shelves in our country, regrettably, that come from China. And that really kind of breaks my heart because I used to, as a kid, remember turning over something and always seeing a made in the USA sticker on it. And then I live in the South and I've been through so many main streets in the South that are really shuttered to a great extent because of what happened with the 1990s developments, and how that's impacted uh, plants and facilities and so on and so forth all across the country. And I still see that the remnants of that, and it's just not pretty, and it's really regrettable. Anyway, I do think you could get yourself back into a throw the sheets out the window situation. So I did mention that a few times. It could get there, and that's when you just have to trade on instinct and discipline. And instinct, of course, would be, look, I just got lucky and it's gotten crazy and I just made a boatload of money very quickly. That is going into my bank account, or I'm going to roll in such an aggressive way that they can only take back 10% of what I've made from me if this doesn't continue, that kind of stuff. Anyway, I think you get the point. If you don't, ask in the forum or in a webinar. Talked about EPS. Can they use EPS to get us back to that 200-day on the underside that we looked at in the SPYs? And I'm going to say that's a big question because of the guidance challenges, right? I just don't think the guidance can really easily come through and say, yes, things are going to be wonderful. It will be very surprising to me if they do that. If they do, great, I'm all for it. And I wouldn't rule it out, but to get back to the 200, you've got to get back up to about 575 from here. So that would be a 10% push during earnings season to get, and it's happened before. And yes, I'm going to say that there's probably enough short exposure combined with what will be gamma exposure to do that. But I don't know. I mean, I feel like that's a real big ask right now. Maybe that's why it's possible, because it does seem like such a big ask. But I'm not predicting it. I'm throwing it out there as food for thought, just to not get too complacent about your shorts if you start to see these guys start to work their magic. As I noted, where we didn't go and where we remain attests to the hesitancy. So to me, as I said, the fact that what we thought should happen, not that when we're wrong, the market's wrong, but I think it just means that maybe I underestimated the market's lack of bounce back potential, right, for now. Or maybe the market just needed a rest because let's face it, that one day we were up 11, 12% in the Qs. Maybe you need a breather after something like that, right? The other question I could say I'm asking myself really is, can we rebuild from where we are to get back up in a big way in this market? Or, right, do we need to get that successful retest done of these lows where we do finally slide in a big way? They hold it near, above, slightly below, whatever the case may be, hold and go. That probably will require timely news developments to happen. That's the thing. But just with all the things, and I don't need to flash them all, I tried to shorten this video as much as I can. But with all this stuff brewing, I think overall you have to say holiday week, you got a little bit of positive silver lining from market breadth, a tiny bit from the sectors, but your leadership areas are still not firing. They're looking concerning. Defensive areas are a little too perky there as well, but you didn't slide across the board, so it wasn't complete risk off. So that's why I'm calling it a slight little positive from the sector views there. And it just, there's no way around this. And I do think that, I think the NVIDIA story just really coming off the rails is a big problem. And I still think there's potential for that. I don't know if some of these researchers are going to, in the end, have been dead on right, and there's the hoax that NVIDIA has pulled is larger than even is known to this point, where people are more people are questioning it. I don't know that. I'm just saying that that's really come, it's very interesting that that's come under the pressure that it has, and they haven't really been able to put much of a short squeeze together to literally crush the accounts of the non-believers, if you will, which is something that they often do when people start questioning and people pile in to these things. So if that turns out to be where they were really playing fast and loose, let's not forget that there's downside gaps galore that could be filled in this thing. Boom, I don't have them labeled, but boom, boom, boom. I'd hate for that to be the case. I still think there's, like everyone else, I still think there's massive upside in uh semi land, and with all the future developments that could be on the way if we don't annihilate ourselves prior to that. But there could be some pain before you get to where things are really firing again. And this being that leadership stock and really looking so challenged right now, not a good sign. So that's why it's another reason for me. You got to concentrate on that and the semis, and that just, those just do not look good right now. There's just really nothing you could say that other than hang your hat on that you didn't slide back down towards the lows yet, or you've got this tentative lower high to maybe build from. But today's action with the lower close, that's not really a good look. You all know this though. We can talk this till we're blue in the face. You can listen until your ears are bleeding, whatever, all the exaggerations, but it really is likely going to come down to, in a lot of cases, these tariff trade developments that are going to hit the tape. But I think just our assessment overall, leaving things and wishing everyone a great, safe holiday weekend. Enjoy yourselves and enjoy the time with your family. Aside from all that, I think you're just left with a situation where uh, the Bulls better work with this higher low that's tentative, or Bears probably come right back and you're in a retest mode, and who knows what happens from there. So overall, short term, Bears are on the cusp of reclaiming control. Intermediate term, they're probably still in control. We'll have to give them the benefit of the doubt there. Long term, Bulls still haven't been completely cracked. So that's my quick assessment on things. And I say just keep trading with great discipline and modest expectations. You're not probably going to get runaway profits unless you get the boost of a headline behind you that you weren't expecting at that time. That's just fortuitous. But if you can just churn your way through the churn by cranking out nice little respectable profits, as I said, you're going to be probably ahead of most. So on that note, I'm going to wrap things up and wish that everyone got something out of this video this week that may help you in the coming week or some week in the future. And I'll thank everyone for tuning in, and we'll see you all next week. Again, have a great holiday weekend. Thank you.